On the other hand, though, some notes this morning from a few big shops on Wall Street might be somewhat discouraging. Kevin Hincks, Goldman cuts their growth outlook for the U.S. Citi says stocks aren't as obvious a buy in the U.S. Take me through these notes here.
Yeah, good morning, Oliver. You know, analysts are rarely ahead of the curve. They're always slightly chasing. And we've had a pretty big move in these markets. So, yeah, Goldman Sachs, Citigroup coming out with some more cautious tones about the overall market. Oliver, I think today's trade is going to be set the tone by, you know, we've already lost the gains overnight. Why? Well, there's probably going to be margin calls this morning right after the open that's going to make the markets very choppy. Then, after we get through that, is when the market will really decide if this is a really dip for buying and people are changing their mode. I think the NFIB number we got today shows a little bit of caution out there, and there's just uncertainty and caution going into this part of the new administration. Like the NFIB number that we got overnight, 100.7, still above 98, the 51-year average of 98, but it's down off that 105.1. Why? Uncertainty is high and rising on Main Street for many reasons, their chief economist said. Small business owners expect business conditions in the next 6 months. The small business owners expecting their business conditions in the next 6 months dropped. And the percentage viewing the current period as a good time to expand fell. So there's just like you're seeing from the analyst notes, there's just a lot of people, just like you're seeing from the guidance. You know, Dick's put up good numbers. The guidance, Walmart, Target, all put up good numbers. The guidance is all cautious. Doesn't mean it's necessarily bad, it's just cautious. I think the airline notes out today are pretty significant. I think tomorrow's the Moneyball number of the week, which is inflation. A lot of people are worried about higher inflation. I don't see how you are worried about that with what crude oil has done and how energy dominates the inflation picture. Look at the price of crude oil over the last, or really since January. It's come straight down from as high as 80 in mid-January to where it is now, about 66. I think this is a market going through just some big level of uncertainty, now getting close in the NASDAQ to 10% down. I think today, at least the morning, will be choppy, and then this market will show its real head, Oliver. That's the way I look at a market like this. You've got the VIX sitting at pretty high levels. You got the dollar down again today. Yields are relatively quiet. And ring the bell, Oliver.
Let's go.
Let's see how bad these margin calls are.
Yeah, that's kind of what I'm thinking too, is that, we might as well just get it started here. We're kind of on an even footing. At least it didn't continue overnight. At least you got a little bit of a bid into Bitcoin kind of helping. To your point, the tone on some of that stuff from Wall Street is not good, but it's always just kind of in nature, a little bit backward looking to some degree, kind of reactionary. But, the Citi note, I think, is emblematic of what we've already seen, which is a big shift into international and a rotation here, too. It's important to realize that some stuff has been solid here. And it has been mostly a rotation more than outright selling. Yesterday, of course, was different. Yesterday was more high correlation. Ask questions, shoot now, ask later.
Yeah. Well, see, remember, and we talk about this a lot with you on Fast Market. Very few stocks can hide from a global sell-off, right? You were mentioning Apple showing some signs of strength, but not on a day like yesterday. It's in 3 of the 4 indices. It's going to come under pressure, right? Those are things you look for. But when everything goes back up, you're looking for the stocks now, Oliver, that are going to outperform on the way up, right? If this market were to rally, if these are the lows or we're at or near the lows, everything's going to rally, but you want the one that's up the biggest percentage. That's what you're looking for now. If we recover from here and we get a good inflation number tomorrow, which frankly I'm expecting a fairly positive inflation number. The expectations are for all the numbers to come down. And with the move in crude oil, I expect energy to come down in terms of the inflation reading. So we'll see how that comes tomorrow. But Oliver, this is your run-of-the-mill 5 to 10% market correction that happen all the time. I wouldn't overthink it. I think there's uncertainty that led to this, that brought us off these high valuations down to more reasonable. I think the Magnificent Seven have gotten punished more than the regular market, as sectors like consumer staples have actually done fairly well during this period. There were some parts, if you looked at the heat map, there were some parts of the market, some sectors that were actually pretty firm yesterday. Now, not the Magnificent Seven, not large cap tech. Those were taking the brunt of the hits. So let's see how this plays out, Oliver. Not my first rodeo. I've seen them before. They don't ring a bell on the lows. So I think this is going to be another choppy trading day, at least in the morning. Let's see how we finish the day ahead of inflation data tomorrow.
With inflation data tomorrow, Kev, and bonds seeing a little bit of give back from last week's rise in yields. Yesterday's sell-off put a pretty strong bid into bonds. With jolts coming out this morning, you think that plays a role in today's session, kind of our one major data point? I imagine that if it's weak, we're going to add it to the list of concerns.
Yeah, jolts is a data point. It's not going to change the overall trend today. I think you're going to see, like I said, some margin calls in the morning, and then we'll see if the street feels that stocks have gotten low enough to start buying the dips here. Oliver, let's see if that number jumps off the page. They're expecting around from 7.6 million down to about 7.5 million open jobs. Look for an outlier there to move the market. If it comes in line, I don't think it'll move the market. Tomorrow's number will absolutely move the market, Oliver.
Okay, sounds good. Thanks, Kevin Hincks, for the thoughts. Appreciate the look there at some of the Wall Street commentary.